Hello, my name is Steve Bigelow with the Candlestick Forum. There's constantly this debate of whether we're in a recession or we're going into a recession. When you're looking at candlestick charts, it doesn't matter what everybody's opinion is about a recession. The important thing about investing is recognizing what the market is doing, not what the economy might do out in the future. So as we can see right now, the Dow is trading sideways. We've had a bullish signal. We had consolidation yesterday. Today they gapped it up again, but they're still in this trading range. So there should be some implication now that because we're above the T line, we should be in an uptrend. However, you can see how choppy this has been down here. We have to get out of this choppy range before you can say there's any definite direction. So if you don't see a definite direction, what's the whole purpose of candlestick analysis? Is identifying when the probabilities are in your favor. And if you can't see whether the probabilities are in your favor yet, then the trading strategy is just sit for a while. You don't always have to be in a position. Same scenario here on the NASDAQ. Does it matter whether a recession is going to occur or not? Not really. We want to be told by the market where our profitability is. Are we in an uptrend, a downtrend? As we can see, we had the left-right combo. We closed back below the T line. We gapped up today. We still have a downtrend. What's that telling us about this area? We still don't know whether they're heading down or heading up or getting through this resistance level. If that's the case, anything that you have as an existing position better have very compelling reasons to stay long or get out, or stay short and get out. So things like Apple, when it gets to the point where you can't tell which way it wants to go, don't trade it. Again, what is the major benefit of candlestick analysis? It allows you to identify with a high degree of probability which way investor sentiment is going. When the markets and a stock gets into a position where you can't recognize those probabilities, don't trade them. So if we see something like this, remember, yesterday, the market was in a downtrend. Not yesterday, Friday. We had a bearish candlestick signal. We had a bearish candlestick pattern, your J-hook pattern. So what did we expect? Well, if it traded lower, you could go short. The fact that it opened positive and traded sideways didn't do what we expected, so you wouldn't have gotten into this trade, or if you had been short, you closed out the trade because now there's no movement as far as what the expectations should be. This is not rocket science. Candlestick signals and patterns produce high probability results. When you can't recognize what those results are, be either out of the trade, go on to something else. There are always good signals and patterns that you can identify as being a high probability trade setup. Roblox today announced that their participation in their gaming was up 23%. You can see the kicker signal, dark candle, gap up, going the opposite direction, shows you there's a dramatic change of investor sentiment with high probabilities are heading in this direction. You've got a fry pan bottom set up with a gap up, high probability you're heading in this direction. So you can always find signals and patterns that tell you when to be long or when to be short, or if you can find a whole sector like the shipping sector, those stocks are acting well. They act as additional confirmation for each other that a recommendation on Sting was based upon a strong signal, a breakout, that we're still in an uptrend, and the other stocks in that sector were acting strong. And today, Dillard's did a trend kicker signal, also a very powerful signal. And look what it did. It broke this downtrend. So when you can add the elements of a signal and pattern, in this case, a trend kicker signal, breaking through a resistance level that everybody else is watching, just provides that much more evidence that you're in the correct trade at the correct time. Clean energy, a kicker signal. Closing right here. What's that tell us? This opens positive tomorrow, breaking this level, still have more upside. So the visual aspects of candlestick analysis is not anything that becomes a difficult technical analyst problem. It's just common sense. When you start seeing sell signals and a close below the T line and a failure to support, you can stay short on this trade. Same scenario. This is what we call 2+2 analysis. There's your bearish harami right at a level that everybody is watching, which means that's where everybody was taking profits. Then they close below the T line on kind of an indecisive trading day. If this opens lower tomorrow, what do you got going on? A bearish doji sandwich telling us we probably have wave 1, wave 2, wave 3, and look at your stochastics. They're starting to roll over. A lower open would confirm that wave 3 is probably in progress. So taking this information allows the candlestick investor to take advantage of the best trading strategies. So in this, something like this, remember, we're going to be doing a option training on October 29th, which basically we walk through where is the best, or what is the best strategies at different points in a market trend or a stock trend. We wouldn't be doing the same strategy here on puts as we would here or here. This is where using very simple combinations of put spreads, a combination, credit spreads, allows you to take advantage with a high degree of probability what the best trade setup. So join us. It's going to be a full day training. It's supposed to last from 10 a.m. to 2 p.m. Eastern time, but you're going to be lucky if you get out before 4 o'clock. That'll be it. Doesn't matter whether we're in a recession or not. How do you make money using the candlestick charts? That'll be it. We'll see you in the chat rooms.